Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, checking in on SPY, IWM, and QQQ. So we had the market roll over a little bit today. The bears taking control more so than we've seen in the recent past. And a couple of reasons for that. Number one, we're due to consolidate. Number two, the tech sector was pulling back, and we saw that weakness yesterday, and we saw it follow through today. And number three, we had Yellen speaking at 1, and we had the delay on the healthcare vote. So just some catalysts that really get everybody on the same page in terms of looking in the same direction, which today was to the downside. So we have our high, the all-time high, low of the pullback, lower high yesterday, now a lower low, and we're looking at these two key support levels, 241.18 and 240.78. If we lose those levels, we start taking out the higher lows. The bears have the solid volume behind them, and we closed at the low of the day. So the momentum is absolutely favoring the bears, but we're watching hourly RSI levels because we are pretty oversold in the short term. So those will lead to short-term oversold bounces, but when it's on the hourly time frame, that's not going to be significant in terms of turning around the daily chart, in my opinion. So this is a significant shift in momentum, and I do believe that we are going to start seeing some lower highs and lower lows form. The weekly time frame is still very strong, but we had a bearish reversal doji last week, and we are confirming that this week with further downside. So if we lose these exponential supports this week, we'll look to the middle Bollinger Band. That's down at 237.23, and really, it's just how low are we going to go is the question. The bulls have been buying the dip consistently, but the difference here is the dips we've been seeing in the recent past have been all-out dumps in a very short amount of time. And this little pullback that we've seen has really been playing out for about 6 days now, where we pulled back, lower high, lower low. It's a different setup than an all-out dump, and we could see this prolonged consolidation more so than we've seen in 2017. IWM, not as bearish yet. We do have multiple tops, very clear resistance in the mid 141s, but we're heading back down to support of 139.01. So we did already get our little lower high and lower low on this daily chart before SPY did, and that's kind of giving us a little bit of a buffer in terms of key support to be watching of 139.01 in the short term. And the weekly time frame, still very strong. Middle Bollinger Band support is 137.94. So what this tells us in the run that we've seen since the election is, number one, we have a lot of room to the downside. But also, that being said, we have a lot of wiggle room to the downside where we can pull back fairly significantly and still be maintaining longer-term uptrends. So just checking in on SPY, SPY could pull back here, and really, I'm looking at 230 as a base of support. So we could pull back to 235 and still be just fine. So that's something to keep in mind as well. QQQ on the daily time frame, much more significant downside, and that's because of the tech sector being the lead reason for this pullback. And I did a tech sector video yesterday where I was starting to point out the signs where I think that we are going to see a bearish Q3 on the tech sector. We're going to see it come back down to earth after the run we've seen since the election, and really timely video for the all-out dump that did occur today. So our lower high has been set, all-out dump closing near the lows 2 days in a row. Big spike in bear volume 2 days in a row. We were watching this declining volume pattern, and it's very clear that it's going to the bears on that break. So our lower high is set. We'll see if we get a lower low. Very key support at 137.12. There's a bearish reversal head and shoulders pattern with our left shoulder, our head, our right shoulder, and if we break this neckline of 137.12 and 137.10, we will see another leg to the downside, and that will shift the trend to favor the bears in the short term. This is the most bearish action in the past month that we've seen in this sector since the election, and really this is the most bearish action that we've seen in a year, since June 2016. So it is absolutely notable. There is lots of volume up here. Volume climaxes often signal the top of an uptrend or the bottom of a downtrend. And in this instance, I do believe that we are seeing a temporary top. Now the question becomes, how much pullback are we going to see? Bearish MACD cross, coming up on a potential bearish TCG cross, and looking for further downside to start tomorrow because of the close near the low of the day. But again, hourly RSI levels are oversold, so we know a short-term bounce is coming in the near-term future. And if we see a quick flush first thing or a gap down open first thing, then we will be looking in the opposite direction for a short-term bounce to play out. So I appreciate you watching. We'll keep checking back in as always. Have a great night.